Let's begin by taking a look at the impacts of a pair of bank collapses. Silicon Valley Bank and Signature Bank were shut down over the weekend, causing some concern for the rest of the industry. 6 News anchor Bailey Bates is live in studio tonight with what you need to know and how this could impact you, the consumer. Bailey, what do you want to tell us tonight?
Chris, federal regulators and President Biden are working to assure the collapses don't fall back on the consumer. A local economist says you shouldn't worry, and this isn't going to be a ripple effect.
Yeah, I don't expect there to be any significant fallout at all from this. It's not a big widespread sweeping banking situation like we've had a couple of times over the course of my career.
Dr. Ray Perryman of the Perryman Group has been studying events like the second largest bank failure in U.S. history for decades. He knew Silicon Valley Bank was struggling, but was shocked to see the rate the collapse transpired.
The very quick run on the bank came primarily because of social media. I mean, people putting feelers out there saying, get your money out of the bank and that sort of thing. That was pretty unprecedented.
Although concerning, he says there shouldn't be widespread panic from consumers about this one.
Well, I don't think most people are going to feel an effect from this. Obviously, if you happen to own some stock in that bank, you're going to see some losses.
Especially as the feds got involved early to protect the consumer and investors.
I think the government made the right decision to step in very quickly and honor all the deposits. That allowed people to meet their payrolls, allowed people to move forward with their business.
Funded by bank fees, the FDIC insures accounts up to $250,000 per person per account, and $500,000 for a couple. The good news, despite insurance, Perryman says from what he knows at this time, banks most Central Texans are using are healthy.
The banks I'm aware of throughout Central Texas are very well capitalized banks and banks that have prudent lending and borrowing practices. And so again, I don't expect you'll see anything of concern.
Perryman says the Silicon Valley Bank collapse is an unusual situation as the bank decided to take a big investment in bonds and bet wrong loans. Plus, they had no risk assessment manager for all of last year. He says the Federal Reserve raising interest rates like they have didn't help either. Doesn't help any of us, Chris.
Yeah, it sounds like it was a perfect storm, and glad it's not going to affect too many Central Texans. Thank you so much, Bailey.